Hi, business owners. Would you like to be able to create a significant tax deduction with the stroke of a pen? Well, let's talk about that today because I'm going to tell you exactly how to do it. Now, most business owners and most people know that you're able to take a deduction for state and local taxes that you pay on your personal tax return. What many people don't quite fully recognize is that the 2017 Tax Cuts and Jobs Act limited the deduction to $10,000 per year. Now, for high-income people who are paying high state and local tax amounts, particularly in big tax states like California, New York, and some others, that is a significant lost deduction. However, almost all states that have an income tax have now come out with legislation that says if you have a pass-through entity, you can, with a simple election, elect to pay the tax that you owe on that pass-through entity's income, for example, your operating business, and take a deduction for it at the partnership pass-through level or S corporation. So you end up reducing your income by that much in your personal tax return. So even though you don't claim the state and local tax deduction in your personal return, you've received it at the business level and it's fully deductible. So that's a great benefit to have. And I've already noticed some CPAs have missed this with clients for last year. I have one individual client who has his business returns done with other CPAs because he has partners who have relationships there, long-term relationships. And what I discovered is that they did not take advantage of this election and it's going to end up costing my client anywhere from $100,000 to $120,000 in additional tax. So even though they've had a long relationship with their CPA, it's not worth $100,000 per partner to them. So what you may want to consider asking yourself is, even if you have a great relationship with your CPA and a long-term one, are you potentially missing out on opportunities for tax planning and saving money? So again, make sure that you're addressing this really straightforward opportunity to create a deduction for yourselves. Just a quick example. Let's say your business generates $1 million in profit and you live in a 6% tax state. That's $60,000 of state income tax that you'll be paying. You won't get a deduction for most of that, if not all of it, on your personal tax return. But if the pass-through entity, your partnership or S corporation, elects to pay that tax, you'll get a full deduction for it. And if you're at the marginal tax bracket, the highest tax bracket of 37%, that's a benefit to you of over $20,000. So with the stroke of a pen, you've just saved yourself over $20,000. So make sure you look at this for 2023. And if you like these videos, please click on the subscribe button and I'll talk to you next time. Have a great day.